What's going on, everyone? So for this post, I want to go over identifying A plus setups. What I need to see for it to be considered an A plus setup is to have three confluences, three of my indicators agreeing with each other. The more, the better, but a minimum of three is the requirement. So let's take a look at a few trades that I took over the last week or two. The first one here, we had six confluences. This is for SPY on the 3-minute chart. And what we had here was a bullish chart pattern, the descending broadening wedge. We had increasing bullish volume, the TTM squeeze showing buying momentum re-entering the market and continuing to grow. The MACD had the bullish cross and held the bullish zone of the indicator, and the RSI created a triple bottom and had room to fill to the overbought level of the indicator. And then the EMA confirmations, we formed this triple bottom, three touches, held the 50 EMA, and then broke and reclaimed the 21 EMA. So a couple different entries you could have taken on this. The break of the trend line here, the break and hold above the EMA on this candle, and the potential break of structure here. So entry could have gone out around the high of day, could have re-entered at the high of day break, and then a couple extra profit levels, areas that you could have taken your profit at. So that was one example of an A plus setup. Second one, a SPY 3-minute chart pattern again, or on the 3-minute chart again, and pay attention to that with your trades. For your journaling, keep track of as many things as you can. Figure out what time of day you trade best at, what time frame you trade best on, what chart patterns. All of those things are really important to give you your edge. So here we had buying momentum on the TTM squeeze was re-entering, bullish MACD cross again. We had bullish divergence, and it was considered oversold here on the RSI. We were bouncing out of a demand zone with a bullish candlestick pattern. And then lastly, this fair value gap to be filled above. So all five of those things are all pointing in the same direction, giving us indication that this stock is oversold. It could potentially reverse here to the upside. So you could have entered on the next candle after this bounce in the demand zone with the bullish candlestick pattern here and rode that up. You could have entered on this previous, the structure break here to the upside, then also rode it all the way up to fill the top of this fair value gap that was created by this large red candle here. So plenty of areas to enter, exit, take profit throughout the course of this, 30-minute span. That was the second example. Here's a third one. Another A plus setup. Again, we just need three confluences, and most of these have had five already. So we had bearish candlestick pattern at the high of day. We had increasing bearish volume, TTM squeeze indicating that buying moment or selling momentum is taking control. Bearish MACD cross, and then it fell into the bearish zone of the indicator. And the RSI rejecting at the overbought level and moving down to the oversold. Nice move down. All of those things indicate bearish indications, so plenty of room for profit here. Could have entered here, could have entered here, here on this 3-bar play, here on the low of daybreak, and then here are a couple extra areas for you to take and let your profits ride all the way down to the pre-market low where we form this demand zone. And lastly, this is an A plus setup that I traded SPY on the 5-minute chart. First three were on the 3-minute, this one is on the 5-minute chart. So what we had here, increasing bullish volume, TTM squeeze indicating buying momentum re-entering and taking control, bullish MACD cross, and we did enter up into the bullish zone of the indicator. And then RSI, we formed bullish divergence as we plotted higher lows while the chart plotted lower lows. And this was also bouncing off of the oversold range, that 30 range of the RSI. So all of those things are indicating the price is at a good level to reverse to the upside. We also had another one of those fair value gaps here. So you could have entered on the bounce off the lower trend line of this chart pattern as we entered that fair value gap that needed to be filled to create balance. Could have got out here at the top of that. Then we could have entered here on this nice above the pre-market high where we also seen resistance in the early morning. Rode that up to the high of day. You could have entered above the high of day, above the break of this, the upper trend line of this chart pattern. And then after we did break, we pulled back and had a break and retest, one of the highest probability setups you'll find in the market. So you could have entered here, rode that up above the high of day all the way until we got this reversal here. So plenty of opportunities to enter and take advantage of a reversal to the upside there. So I hope that was helpful. Again, identifying A plus setups, look for three confluences among your indicators and take advantage of it.